Hi there, welcome to Grain TV. It's Tuesday, April 12th. We had a USDA crop report. We'll get to that in a minute, but first let's take a look at the closing prices on the grain hedge trading platform. Corn gaining 6 cents a bushel, beans up 8, and wheat up 5 1/4. News today: before the crop report, there was some buying interest in wheat from Japan in their regular tender, looking to buy from Canada, Australia, and the U.S. U.S. will probably garner some of that business. Egypt also confirmed the tender that they offered yesterday. Romania, France, and Ukraine were the lowest offers in that tender deal. The U.S. not even choosing to bid because we are so far out of the market. But in the crop report news, these numbers were not terribly surprising because April is usually a pretty dud crop report because there's nothing really survey based here. So it's really just adjustments to things like exports and feed use. And so there's no big surprise here really, but let's take a look at what the numbers said. USDA increased their corn ending stocks number for the U.S. based on lower feed use by 50 million bushels. They did not, however, change the export number. That was potentially a place where they could have lowered exports, although there is quite a bit of marketing year left and we are seeing some strength here. So it's not terribly surprising they left that number unchanged. What is surprising, however, is that they did not change the wheat number. They left wheat stocks pretty much unchanged, instead not changing the export number. And in my opinion, that number needs to come down by another 50 million bushels. With only a month and a half left in the marketing year, we are quite a bit behind where we need to be to reach that number. So I look for carry out for U.S. wheat to grow to 1 billion bushels by the time this is all said and done. In soybeans, they did lower the number, lower than analyst expectations, choosing to increase exports by 15 million bushels. On the world carryout numbers, again, keeping with the theme that wheat is swimming in excess supplies right now, they raised wheat carryout at the global level by 2 million metric tons to 239 million. They also raised corn ending stocks as well, and fractionally moved higher soybeans ending stocks on the heels of Argentina having a slightly better than expected crop. So overall, these numbers were just kind of looked at, and then 30 minutes later we sort of just traded normal, which has been, in the case of soybeans, continuing to see higher and higher prices. And we're getting up to levels that I think farmers need to start paying attention to, especially for new crop 2016. We're seeing that new crop delivery trading just a hair below 950, which is pretty amazing when you consider where we stand today versus where we stood this exact same time period last year. And I want you to look at that new crop November futures price at 949 today versus 942 the same day last year in April at 942. So pretty much same type of price situation, but the environment, especially in terms of U.S. stocks, is dramatically different, up 100 million bushels from this time last year. Now, pundits would say, well, we're going to have lower acres, at least that's what USDA said, but those lower acreage, as of USDA's projection for March 31st, is only 500,000 acres. That is a drop in the bucket when you consider 45 bushel yield as a U.S. average, so that's only about a 20 million bushel change in carryout. But the other news, of course, is that many people are thinking that that survey that was based on March 1st conditions will, when we actually get into June, we'll see a much different soybean, a much higher soybean number, because farmers will have switched in light of this big price rally in beans. So farmers, if you're listening, I think it's really time to get serious about pricing some of these beans. If 950 is the worst you can do for the year, that's a great thing, but I'm afraid that with the fundamentals the way they are, without a weather scare, we will probably see low to mid $8 beans, and that's a far cry from where we're at today. That's all we got on Grain TV. As always, if you're interested in learning how Grain Hedge can help you in your marketing situation, visit us online at grainhedge.com and take a demo of our free trial trading platform, and also get our morning commentary and our technical alerts every day. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at GrainHedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at grainhedge.com or by phone at 877-472-4607.